a.m. Eastern Standard Time. We're getting started here a little bit late this morning, so my apologies. We had a little bit of technical difficulty with our browser, and we'll wait a moment for people to filter in. Okay. So the topic of the conversation this morning is going to be, yes, of course, on the pre-market activity, but I want to talk about gold for a moment because gold just really took it on the chin yesterday, and there are a couple of anomalies that are happening out there, and when you don't completely understand the price action of one asset versus what the Federal Reserve is doing, when intuitively or when historically the asset does perform well in an environment or an accommodative environment that we find ourselves in right now, you have to ask yourself the question of as to why, what's going on out there. And until that answer is resolved and we have a clear picture of what is actually going on with this market and with the gold market in particular, we need to side on the side of caution. Now, I want to talk about the price action of what trades inversely of gold first, and then we'll talk about the price action of gold. The US dollar it ripped out of the gate Monday into Tuesday, and yesterday as we were piercing, this is a 1 hour chart, we'll stay on a 1 hour chart for a moment, then I'll pull back to a 4 hour chart. As we were piercing the third standard deviation Bollinger Band on multiple time frames, not just an hourly time frame, but also on a 30-minute time frame, this is unsustainable. So we added more to our gold mining trade yesterday in anticipation of a pullback because the unsustainability of the move of the dollar was evident. We knew it. We took advantage of it. And, of course, we are now rolling over. Does that mean the dollar is done rallying? No. And as I discussed with members last night, we saw a new weekly high this week versus last week on the U.S. dollar. That is significant because the prior week was a very bearish week. Now, why is this important? It's important because gold and the miners trade inversely of the U.S. dollar generally. At times they will trade in tandem at times of geopolitical fear. But normally there is an inverse correlation. It's undeniable. And the dollar is showing a lot of strength here. Members, for the weekly charts and analysis, just go to the website, click on Market Wrap for Tuesday, and you get a quick synopsis of what I was talking about. So the dollar is down this morning. No great shock. The rally yesterday, again, was unsustainable. It didn't take a genius to figure this out, so we bought more of our gold mining trade. And will we see a crash here on the dollar? I don't know. I doubt it at current, but we are seeing some technicals on a weekly basis using the slow stochastics, which would imply that when you see Stokes trading down below 50 and declining, normally rallies tend to fade. So we need to think about what happens if we're wrong. What if the dollar rally doesn't fade into the back half of the week? How do we readjust our portfolio of silver and gold? Actually, not gold. I keep saying gold because it's a proxy for our gold mining trade. Silver and the gold miners. I should be more specific. We're going to have to reevaluate the position because if the dollar appears poised to continue higher, well, then we're not going to want to be as overly leveraged towards the gold side as we have been. Caution, I should say a caution flag is on the track. And of course, my screen here is freezing up. This has happened to me all morning long so far. That's why I was late. This is the joy of being live You never know what's going to happen. And we're going to get no end process, no. Ugh. All right, well, that stinks. Let's take a quick moment and we'll reboot it. Sorry, folks, for the delay. Let's see who we have in chat. Good morning, everybody. Hey, Sam. Germany wants to get a union for the banks. Domestic German banks or EU banks in general? Or global banks? If it's global, that means they want to take on the Federal Reserve. EU banks. Good luck with that, with them. I'm not sure what their main goal is there. Is there a reason as to why they are looking to form a union? What that would look like? What is their end goal? I'm sure it's not going to be a bank union pushing for a gold back anything. I did hear, I was listening to Max Kaiser yesterday on YouTube, and he was talking about, oh, I see. So they may be looking to set up a bad bank, taking all the bad debt off of the Deutsche Banks of the world. Switzerland's not part of the EU, but you have Credit Suisse over there. Probably a couple of the Italian banks taking all their bad debt, loading it up onto a bad bank balance sheet, and letting that implode. Okay. Does that sound accurate, Sam, or no? They're looking to do something else. So back to what I was hearing on Max Kaiser yesterday. I'm going to do a little bit more research on this, and he was talking about China with its gold reserves being underestimated. Rather than having 2,000 tons, they have upwards of 20,000 tons of gold, and that they may be issuing a cryptocurrency backed by gold. And if that happens, you're going to see the dollar just simply get hammered. All right, so this is the 4-hour chart of gold, the dollar. It's certainly not it's certainly not dead yet, right? We had a pullback here. Can it consolidate and move higher? Certainly. We do have resistance above, though, at the 98 level. Taking a look at something else that's very strange this week, and that is the ten-year Treasury bond. You know, you would think that with the Federal Reserve in there buying up short-term bills and J.P. Morgan buying huge amounts, I mean vast amounts of longer-term treasuries, that you would have seen a big rally in the 10-year Treasury bond, and it didn't happen. You had a minor blip here, but we have completely given up all the gains since the Fed meeting. And then some. So what I'm looking at here on this 4-hour chart is really not a great major recovery here. I'm worried about a bear flag setup. This is a horrible bear flag setup, but you get my point. And I'm watching for a break on the 10-year Treasury bond. Remember, the 10-year Treasury bond put in a new weekly high after flashing a major pullback last week on the Fed announcement. What gives? And again, I appreciate the fact that the Federal Reserve is in there buying shorter dated maturities, 3 months, etc. But those 3 months yields this week, they're up higher. So something is nefarious going on here. I'm not quite sure what it is, but when in doubt, think about an exit strategy for your long trades. Gold. And then we'll move on to the major averages. Now here's a 4-hour chart of gold. Again, it looks like we're setting up for a dead cat bounce here. Well, we had our dead cat bounce. I am very nervous about gold at current. 1-hour chart. This bar just opened up at 5 a.m. We're still up on the session by over a third of a percentage point. So, members, we'll be talking about an exit strategy or a hedging strategy for our gold mining trade and our silver trade this evening, and perhaps sooner if things don't go our way. So stay tuned for an action plan, and we'll look to rebuild if and when at such time we understand what exactly is going on in the bond market and in the currency market. I'm not buying the fact that the dollar rallied yesterday simply because we had a stronger than expected non-manufacturing PMI number. It just doesn't make sense. There was a huge move into the dollar yesterday. It was backed by volume and inconsistent with the short covering rally. So I'm not exactly sure what happened. If somebody has comments, leave them in the chat box. I'd love to hear feedback. But in all the news items, I'm not seeing a cause for a huge dollar rally or a rally in the bond market, except for, at least on the bond market, technical reasons. Sam, this is it. 115, 5,000 German banks on the banking union process to arrive at. Oh, I see what you're saying. So it's like an FDIC type program. All right, so gold is on the watch list for a possible stop out. We will not be looking to add more to our gold position or the gold mining position today. I doubt it very, very highly. Taking a look at the stock market futures. Now, I was predicting going into the week that we would get a pullback, and it looks as though, let's go to a 4-hour chart. I don't like these hourly charts. It looks as though we may be setting up for a pullback here. The daily charts really imply that we saw some candlestick action yesterday, which is not bullish. I mean, we closed up higher, a lot of indecision out there. So what I would be watching for here is a break below this support level on a 4-hour chart on the S&P. And I'll go over where those numbers are in a moment for those listening on the podcast. I would be looking for a break below 3060 spot 76 on the ES futures, S&P futures, and I'd be looking for a breakout above the 3084 spot 09 level for a continuation move higher. Taking a look at the NASDAQ 100, down as well this morning, but very, very slightly. Let's call it flat. I mean, it's so minuscule how much we're down. So we have resistance above at 8,024 spot 09. Watch for a break below. Let's go with the lows of yesterday. And that low was at 81.83. So keep an eye on that number. If we break down below it, you're probably going to see some programs selling out there. Where are my Russell futures? Okay, so the Russell futures are interesting in the fact that they have broken down, believe it or not. Yesterday, we flashed at the morning open, we rallied and then flashed a bearish reversal bar. We closed out the day yesterday down below this lower band of support at around the 1599 mark. We're attempting to recapture. So the Russell 2000 is showing some signs of weakness at current. Does that mean it crashes? No, it doesn't. We've been looking for a pullback and a retest of the breakout point. We'll see whether or not that holds. But history has proven as the Federal Reserve expands its balance sheet, so goes the overall stock market along with the expansion of the balance sheet. So it's very difficult for me to come out and say right now, listen, the rally is over. I don't think it is. As long as the Federal Reserve is in there expanding their balance sheet, the stock market, according to history, should follow suit. So I don't believe in it's different this time. Let's take a quick look at commodities. Oil, light sweet crude. We pulled back off of yesterday's highs, but we're setting up for a continuation move higher here on oil. We have a nice wedge formation forming. We're down on the session, but I think that we're going to see a continuation move higher. Can anyone say inflation? The Federal Reserve won't. Gasoline, higher. It appears it's going to go higher. It's not higher this morning, but it appears as though it's going to go higher. We're seeing higher lows. We did see some pressure overnight, but we have managed to recapture support, and we are now pressing higher within a wedge formation. And now we're really beginning to pick up steam here. So gasoline moving higher. What else do we have? Copper. Copper was looking very strong yesterday, and it continues to remain strong. And last night, I didn't go over this with numbers, but I was scouting around for some interesting charts to share. And one of the charts I came up with was the CRB Commodities Index weekly basis, and it's really gaining a foothold. Not enough of a foothold yet to go talking about how technically bullish it is, but I'll be watching it and I'll talk about it soon. Matthew, good morning. Excess high on RUT. Can you elaborate on that, please? All right, let's move on to lumber. It's been rallying of late, pulling back here a bit, but across the spectrum, you're seeing a lot of strength in commodities. Here's a weekly chart. Lumber, double bottom setup. We're forming a right side of a base. Once we break out, at least on the futures market, above 446 on lumber, it's off to the races. We're going a lot higher. And I'm not a futures trader, but I'm keeping an eye on the futures market to see whether or not we have a rise in inflation in commodities. Take a look at natural gas here, weekly basis. We shot through the roof this week. Major league breakout. Matthew, Russell had exhausted selling tail yesterday. Yes, I agree. Indicates rotation lower. Well, you're looking at a 4-hour chart. Does it mean a pause, a respite? Yeah, and I wouldn't say that you're wrong. It could be 100% right for all I know. I'm very open-minded. But taking a look at the Russell, on a weekly basis, I mean, yeah, we're off the highs of the session, but we have a new weekly high, and the trend is clear and defined. Let's clear this off. Okay. So we do have resistance up here. And this is the struggle, right? We have resistance right at, what's the high here? 1603.5 on the E-mini Russell 2000 index futures. So we're struggling to get through resistance right now. I'm not in a position to say whether or not we're going to break out or break down. I'm just here to watch and see the price action. And at current, you could argue, Matthew, that you're setting up on an intraday basis, 4-hour chart, which is what you're looking at. Could be setting up here for a head and shoulder setup, left shoulder, head, right shoulder. Here is the neckline. That's something to watch out for, but right now it's not something to act on, because the path of least resistance is clearly remains to the upside. So I don't want to go shorting the Russell. And at current, on this 4-hour chart, we're beginning to nudge above this upper band of resistance. And it appears as though we're getting ready to take another run at that weekly resistance level I just showed you a moment ago. So watch for a close. If we close out this 4-hour bar, which closes at 9 a.m. Eastern Standard Time, above this upper band of resistance here, in all probability, we're going to move up higher on the Russell 2000. Thanks for the comment, Matthew. Really appreciate it, though. Appreciate it. And with that, folks, please join us tomorrow night, which is going to be Thursday night stock charts live. That's where we take a look at the weekly charts of the major indexes and some of the stocks that we're watching and ETFs to see how they may be closing out the weeks and how we may want to position ourselves in advance of the following week. Yes, that's when we begin our homework on Thursday nights for the following week. So if you're not currently a subscriber to our YouTube channel, please click that subscribe bell, then click that notification bell and click all, and you get notified of when we go live. If you want a 15-minute alert, I'll post this video in a moment on YouTube, and there's an opt-in email. You can just enter email technically anywhere on the website, and you can get alerted with a 15-minute alert prior to us going live. If you watch this on YouTube, on Twitter, subscribe to our channel there, or follow us there, I should say, and share with a friend, please. And everybody have a profitable trading day, and be well. Beware gold buyers. Remember, we're going to talk an exit strategy on some of our gold position later on today. So stick around. Everybody have a great day and be well.